Hi, everybody. So I'm Dominique Villanueva. I'm the Director of Business Development for MMH Blockchain Group. I think you have met two of our panelists. So we have Amelia, Zhang, and Peter McCullagh. And new on the panel today is Hussein, Hallak. So I know that we're between you and lunch, so we will try to give you great advice or share knowledge and move as efficiently as possible. So the topic is what are the new trends and innovations that are impacting the crypto trading and investing market. So with 2018, with all the twists and turns that have kept our pivoting skills quite sharp, can I ask the three of you to share what were the top or the key innovations or changes in the landscape that have really shaped the investing and trading market? Do you want to start, Amelia?
Yeah, sure. Following up what Michael said, and a lot of people ask the questions regarding regulations and registrations. So I'm from CoinSquare, and we are Canada's leading crypto exchange in Canada as well. We no longer promote us as exchange, and officially we will say it's a digital platform. Because we are actively talking to the regulators right now, and we as CoinSquare have 140 people in Toronto, and we have 30,000 square feet office in Toronto. The reason why is, first, we are in this for the long game. Second, we are telling the regulators we are doing the right thing. We are actively talking to the regulators and educate them what is blockchain. And also, by having the conversations is make sure which kind of license they can give to a digital trading platform is very important. So the trend I see is regulation is coming. That's why from the ICO point of view as well exchange point of view, when the regulators come after you from the legal law and the regulation point of view, there will be a lot of business run out of business, and then a lot of business that have to close down because of regulations.
I think for us, the biggest changes are that reality is now setting into the world, that this technology is real, that to date, a large portion of the investment and the players in them have been scams, as it has been in every major technology revolution we've seen in human history. And we're actually more bullish now on what's going to come, because we think the next wave is really around real cryptocurrency, not scams, not raise $100 million and 2 years later I still don't have a product, but real companies solving real problems that produce real value for end-use customers. And we're we believe, see that tipping point starting to occur now. And that's why we did the research we did to kind of go confirm and validate that kind of work that is out there. So we think we're actually right there. We're probably 3 to 5 years from really the big tip, but we believe, by the way, there is a massive crash coming, worse than it is now, and that will clean out the garbage, because it's about 95 to 98% garbage today. And then we'll have real companies who can use this capability, not just the blockchain, but a form of the blockchain, which is really cryptocurrency, to be able to change the way they fundamentally do business and interact with people. And so fundamentally, we think we're seeing the clean out occur. You know, they're still prosecuting, I don't know if you guys read this, but they're still prosecuting people from 2007 and 2008 in the United States in the mortgage scam. They're literally laying cases against people last week. This is not over. All these guys that made all this money ripping people off, they're going to jail and they're losing all their money. And it might take 10 years, but it's coming. And we're right there where we see it now.
Thank you. I agree with the sentiment, of course. I think I sit more on the startup side, based on my interest. So I think the trends that are coming in are where we go beyond the Me Too. Like, whatever happened in tech, let's do it blockchain. I think the next trend, and the most exciting trend, at least for me, is that when we start seeing real innovation based on what the capabilities of blockchain technology and previous technologies have come together, the convergence of technologies is coming together, not just the blockchain, like you explained about AI, cannabis, and how they come together, and really creating new things that we didn't expect, we couldn't actually anticipate. I'm excited about the announcement that Mike's going to announce, but I think we want to be surprised. We want something. We want to see where Uber, just like Uber, that wasn't expected when people first came up with the internet. Everybody expected, oh, we're going to have video conferencing. That's going to be big. But nobody expected Uber. Nobody thought that's going to come in. Nobody thought that Wikipedia is going to come in. So I think these are the things that are exciting. And when we start seeing those kind of innovations, we would know that now it's becoming a real game. And I think the crash usually pushes people in that sense, because the garbage will be out, and people are like, hey, we can't make quick money here. So only the long-term people will settle in, and they will start actually doing real work. There are, just to be clear, there are a few of them, and quite a few of them that are doing that. But as well, like anything, there's a chance for a quick buck. We see a lot of people that jump in.
I think it sounds like the panel agrees. I think with every in new industry, there almost seems to be a need for a contraction before you can have that expansion again for the growth, and with these changes. So I think we've seen some of that in the numbers with the ICOs as well. I think first quarter was, raised more in than all of 2017, but then there was a dip in Q2. So I'm going to ask the question: are ICOs dead? And I think we have great perspectives here.
Well, if we look at the numbers, no. Because so far, I think the last numbers that I've seen is that we had more ICOs this year than last year so far, compared to the same period. So just getting the number, I think like 537, something like that. And then amount of money that has been raised is also more than the money. ICO is as a vehicle and to raise funding is not going anywhere. Definitely needs to evolve to match regulation, to match what people need to it. And the bottom line is that it's still, aside from the idea of raising money, it's still, companies are still raising more money than they need, and more money than that they can know what to do with. And sometimes, most of the times, for those of us who worked with entrepreneurs know that more money actually comes with more problems, not necessarily less problems. So you end up overspending on hiring, overspending on many things that you shouldn't have spent at the start period of time. So I think we need to see a change in how it happens and where the impact is.
I don't think ICOs are dead. I think we're right at a complete transformation of the financial system. Every hard asset in the world will be digitized. Gold, real estate, silver, you name it, it will all be digitized because it's faster, simpler, cheaper, easy to maintain, and it can't be corrupted. And so ICOs are not dead. What's happening is we have massive resistance from the existing investing community. So if you're a venture capitalist in San Francisco, you have a terms that you've signed up for your $12 billion fund, if you're Sequoia, that you just raised, and you are not doing ICOs, and you are not doing any of that crap called crypto. You're investing in good old-fashioned startups that we overinvest in and put 3 times privileges and restrictions on you and earn our money the old-fashioned way by taking it away from the founders. That's the VC model today, and that model is going to get blown up. It's going away. This is the last vestiges of that model in this next 3 to 5 years. All those big funds, Son's $100 billion fund, everything hits big just before it dies. Everything gets massive just before the crash. That's what's happening right now. And these guys are all going to find themselves out because they don't understand these business models, they don't understand this new approach, and they don't understand that digitizing physical and monetary assets is the only future that we will have any trust in at all. And as long as they keep running those businesses the way they're running them, which they are today, they will still produce their 1 in, I think it's 15, not 10 anymore, right? The success rate in the valley. Their rate's going down, not up. And I think the other big thing around ICOs is I think there's a massive market here where people need to go out and say, what are you going to do with all that money? What are you going to build? Where's the product? Where's the solution? Whose problems are you solving? How are you generating income? Where's the business? And I think that's actually going to slow some ICOs because they're going to digest the money that's there. But long term, this is going to take over.
Yeah. So what I see, especially coming from Toronto, Ethereum is coming from University of Waterloo, and Toronto has a huge Ethereum community there. What we see at the beginning of this year is everyone wants to do ICO. Everyone wants to make quick money. And even in January and February, a lot of people still raise 20 million without a proper white paper and advisor can be downloaded from Google. This is no longer what is happening. What I see especially coming from exchange point of view, a lot of ICOs approach us, want to be listed, while we are actually an exchange dealing with fiat, and we can really take a lot of ICO coins. So people come to me, and then, because we do help ICO companies liquid their coins if they are compliant with the regulations and the compliances. But a lot of them come to me 3 months ago, say, we're gonna raise 30 million, 40 million. 5 months later, how much they got? 50,000. So that's what I see is, if you have a great product and you need to really do the marketing, the time for ICOs, like, oh my God, I am, what Michael was talking about, I'm a truck built on blockchain, I have a white paper, and my advisor is an ex-Google guy, boom, 5 million, every investor. Is this gonna happen again? No. What can I see is, ICO as a great vehicle for startup companies to raise fund is very likely to raise for the seed round funding. And the amount of money they get out of ICO is way more than what they get out of the seed round. I'm also working with a lot of Asian and Chinese investors. Now, one of the huge vehicle driving the ICO fundraising at the beginning of the year, they're being very cautious. A lot of times, North American ICOs say, I want Asian money, I want to go into Korea, go into Tokyo, go into China, I can get a lot of money. They're being very cautious right now. Instead of doing tokenization, they will do more equity and combine with the traditional fundraising as well. So I would see is the craziness of like ICO quick money is gone, but as what Peter said, if there are good projects, you actually really want to do something, you have a great project, people will still look into it, but more carefully.
So I think that leads into the next question. I think with what you're sharing here, what if there's a company out there or a project looking to launch, and it sounds like that we're going to more of that blended traditional and ICO crowdfunding, what company can they look to who's done it well so far in this new market in 2018, and maybe some best practices?
Well, we just closed 2 subscribe rounds for 2 of our companies in the last 8 weeks. So we have pretty recent ones. There's a Care Crew here in town, which is CRM with a digital virtual assistant in the dental office space, building insurance settlement verification on the blockchain. Alpha Block, which is out of Toronto, which guarantees 4 to 6% alpha on any index they've targeted so far, 7 indexes they've targeted so far. Good companies can raise money, whether it's an ICO, whether it's equity, whether it's some combination. You know, the future is a combination of, you know, tokens to open up. If you want to open your world up and open it to the world, then you'll probably have some form of utility token that will be approved, and you'll be able to do that. And you'll also raise money in a traditional equity way, and there'll be some combination of those things is what will end up happening. And so, you know, best practices are, you know, find a problem that a customer has that is painful and they're prepared to pay for, and then go to that customer and say, if I fix this for you, will you pay me and how much? And when they say yes, go fix it and go get paid, and then get them to refer you to 4 more people, and then go raise money. And if you look at every one of the companies that we've invested in, that's how they start. We start with traction. Where's the customer? Where's the pain? Where's the problem? Solve it, prove it, get paid for it, and your business explodes from there. And so we see it, and like I say, we only do 4 to 6 companies at a time, but we just literally in the last 2 months just closed those rounds, oversubscribed those guys, and it was a combination of those things.
I think I agree with Peter on some of the companies. However, it's very difficult to say what are the good use cases, because sometimes when working with hundreds of companies, you realize that there are different companies and have different approaches to things, and they require different things. So, for example, if we look at where I think ICO started and made a difference is for those companies who don't yet know if there is a valuable product or a market to explore. So sometimes you do have to raise funding to kind of explore a market and find your path. So some of the things that I'm very interested in is Civil, for example. I don't know if you've seen that ICO. Just I think they just offered the token a week ago, where they're trying to address the journalism market, which is a very interesting problem to solve. Is there money in advertising, journalism? Who knows? It's probably a declining market, but it's a very interesting market. How they approach it, I think, is different. And the other thing as well, anybody who built a company will know that what's apparent on the forefront, and Peter, because you worked with companies, what people see from the outside and they think this is a good use case, they will never know what happens in the back end. And I think when it comes to ICOs, there's a lot of things that you have to do that, let's say, with the regulators, with the lawyers, with how to navigate the minefield. It's going to take, you have to talk to the companies rather than just overseeing what happens from outside, and see how did they navigate those challenges, and those challenges are always changing from month to month sometimes. So I agree with Peter on some of the fundamentals of building a good business. Otherwise, I would say look at your space and who are the companies who are working in your space, and have a deep conversation with them rather than just seeing what they're putting out there. And talk to the founders, you learn a lot. So I think this is the way that new companies need to do it. Learn from companies in your space and navigate the regulations that are maybe applicable to your space in particular.
Great, thanks. Amelia, maybe you can give us perspective from the other side, from the exchange, like as ICOs, you've talked about it, but yes, what are your thoughts?
Yes, so there are a lot of great projects in Toronto. I'm very proud of the community we have there in Canada, especially with Ethereum. There's a really strong support network there. What I see is, even at the beginning of the year, people have a very vague line between what's their utility token and security token. While they clearly raise the fund to tell the investors that you are invest for return, this is a security. But they say, no, this is utility because we're gonna use in our platform to exchange value between the users. But regulators didn't look that way. So what I see during the past half a year is, for the new ICO companies, they realize they can't get away when playing the vague line, because one day the regulators will go after you. There are a couple interesting projects happening in Toronto. One I personally really like is called the Buns. So they have building a community and doing as being a marketplace. Already have 200,000 users in Toronto, and then they are offering this Buns coins and purely as utility token. The reason why they make it as ERC20 token is because they want it to be a decentralized thing. They want to build in a community, and one day, even when this company doesn't exist, you can still use their token. And also, there will be other companies like Core, which is a company who are building on blockchain to offer security tokens derivatives. And they make it very clearly since day one, they are security token based on polymath. And they want to do the first IPO. So I think that's the trend for ICOs to move forward is, if your utility token, look what people have done, but got traced by the regulators to learn from their mistakes, and being very, very careful to define yourself a utility token. Also, if you can get away and you want to bring value to investors for your users who can use your coins to make profit, make it a security token. Yes, there's a hell lot of papers you have to do, but it may save you from the jail.
That's definitely a good thing. So I actually think the advice you've been giving around to companies looking to launch is something that investors who are looking to get into the market can learn from. But as we end our panel, maybe you can leave us with one piece of advice you would give to somebody new looking to come into the space now that their mass adoption is maybe more likely, given the regulation is coming as well, to clean up the bad actors. Do you want to start?
Yeah, I can start first. I think like there are a lot of fear in the market, especially coming from the exchange point of view. Everyone is thinking about it's a bear market, Ethereum is keeping going down. A lot of fear in the market, but at the end of the day, if you are new investors, what do you want to get into the market? You get in because people bought a Lambo out of the cryptocurrency because they hold it since 2014. You want to be part of the quick money making, or you are believing in the technology and you want to be the early adopters and early evangelists to move this technology forward. And whichever coins you believe in or whichever project you choose is because you believe in this project and believe blockchain gonna disrupt the industry, and that you could be buying Amazon stocks in 1995. And it's still gonna go through the whole wave, but as what Peter said in his presentation, I was really impressed, is we're still at a very early stage and blockchain gonna disrupt it. That's why we're all in this together.
I would leave with two thoughts for you. One is the only thing that matters is traction with a customer. If you're not getting traction with customers, you're not doing the job. That's it. Traction is the only thing that matters. Second, put one provocative statement out there for you to think about. I predict that in the next year, we will see a company that has done an ICO successfully sell for less than the cash they raised, because it's going to cost $15 or $20 million to clean it up. So I believe in 2019, we will see the first time ever a company that has raised maybe 20, 100, there's lots of them, right? You were talking about earlier, who will literally go bankrupt or be sued into bankruptcy because their shareholders and token holders have said it's been 2 years, you've done nothing, and the company's going to go bankrupt or someone will take it over, and it will be less than the cash they raised because they're going to have to spend millions of dollars to clean the thing up first. One prediction to think about.
Thank you very much for having me on this panel. It's very exciting, and it's always good to learn as well. I think, number one, if you're an entrepreneur or an investor, do not enter a field that you're not willing to invest your time before your money. So if you're not willing to study, if you're not to learn, if you're not willing to read the Bitcoin white paper, the Ethereum white paper, and to dive deep into this, do not put your money, because you're going to lose it. Because you're always going to make the wrong choices, because education comes first. So whether you're an entrepreneur or an investor, I think education comes first, learning comes first. Put your time before your money, and if you're not willing to put your time, do not put your money. And never ever invest through somebody else. This is still I would say, whether you're the way entrepreneurs do it is, I don't know blockchain, but I'll be it with a co-founder who's a CTO who knows blockchain, and that's how I'm gonna do my great idea. Never do that. You have to invest your time. You have to know enough. I give it like the threshold is know enough to call somebody's bullshit. So if you don't know enough, do not invest. And in the investors, what they do is like I gave it to somebody else who knows Bitcoin, they will invest for me. I think the market is not yet, Bitcoin or startup, the market is not yet mature for you to do that. So I think at the early adopter stage, you have to invest your time. And that is probably the one advice that I got that was very, very helpful. And it's a fascinating field. You will have a lot of fun, at least if you're a geek like me.
Well, great. Thank you to our panelists, Amelia, Peter, Hussein, for sharing your insights. And we'll see everybody back here next year to check in on Peter's prediction.